Hello, everyone, and today I just want to welcome Oleg Koch at NFM Lending. And one of the things that we bring here with Power Background is the updates on markets, updates on lending, and just how to be creative in today's market because things always change and business models always have to pivot to where the markets are going. So, Oleg, I really appreciate you just being here with us today and going through your new program. I mean, you've talked a lot about it at our last discussion, and I feel like we really have to take it to our community and just inform the brokers and their customers on the lending programs that you're offering. So I really appreciate you taking the time to go through the slides with us today.
Yeah, David, thank you for having me again. And, I got to say, this is probably our most used program right now, especially what's going on in you could say, uh, the real estate environment right now, where you have more homes that are sitting, less buyers that are making offers, and just overall, there's just a lot of uncertainty. Is the home going to sell? Is it going to sell for what the client the seller wants to sell it for? Is it not? What's going to happen? And so anytime you have an environment like this, we've noticed that our bridge loan product gets a lot more attention. It becomes more of a weapon that's used a lot better in a market like this. So we've been doing a ton of these lately. We've enhanced the product a little bit since we spoke about it last, and so we'll talk about those enhancements. And for those that have never heard about our bridge loan product, it'll be your first time hearing about it, how you could use it, what makes it special against other bridge loan products, and so on. So essentially, most people know what a bridge loan is. For those that don't know, it's pretty much a transaction where you have somebody that wants to buy first, use their equity from their current home to put as a down payment on their next home, move into the home that they're purchasing, and essentially sell the one that they have currently. And so that is what a bridge loan is. Here's how our product works. So first and foremost, as an agent, you got to identify the right clients. So number one is, they have a house to sell. If somebody doesn't have a home to sell, this will not work for them in any which way. So one is they have to currently have a home. Number two is they have to have equity. If they were somebody
Hmm.
that previously purchased a home in the last few years and they put minimum down, or they came in with zero down and now they're looking to upgrade, it's not going to work. I mean, these are for the buyers that have owned their home for a while. They have a ton of equity that they could access, and they're looking for their next kind of move up home. And then the last part is they're ready to buy. Ultimately, they're ready to go. They're ready to move. That's essentially the right client. If they have equity, they have a home to sell, they're ready to buy, we could help them with ease with our product. So one thing to show, right now in our market, 2/3 of buyers, clients are buying and selling at the same time. Like, so a majority of the buyers out there today
Hmm.
fit this category. And I think there was a kind of a study done recently that the average first-time home buyer now is like in their late 40s, early 50s. And 10, 20 years ago, they were in their early 30s, and then prior to that, they were in their late 20s. What are we trying to say by this? More and more and more of the younger generation, the new generation, they're holding off to buy. It's just a fact.
Hmm. Hmm.
Therefore, a lot of the people that are active today in this market currently have a home, and a lot of them, this is the reason why maybe they won't make a deal happen, or they will make a deal happen. Um,
And this is Oleg, and just to fill in, this is something we talk about a lot with our brokers is they have to understand the buyer pool that's out there. If we don't understand the buyer pool that's out there, we're gonna have a hard time, knowing how to best service them. And I think this is where you and I, we put a lot of extensive study on figuring out what the market's really, who are our players, who are our sellers and our buyers. And I agree that a lot of buyers have equity not in their bank but in their homes, and they truly have to learn how to convert that to additional opportunity.
100%. So here are the benefits for with our product. Number one is it helps them qualify for a higher purchase price. That's number one. And number two is it's flexible, and it allows us to structure deals in this market that otherwise wouldn't have come together. We could close in funds in as little as 2 weeks. And so essentially, if you look at how are we able to qualify them for a higher purchase price. So one of the unique parts about our bridge loan product is that their equity that they have in their current home, a portion of that equity can be used to not only for the down payment, but we can actually pay off debt to qualify. So let's say they have a home that, or let's say they have an auto loan of $1,000 a month, and they owe,
Hmm.
let's say, 40 grand on it. We could utilize their current equity to pay off the auto loan, which will essentially, in our example, with $1,000 mortgage auto loan payment that we're paying off, we could basically qualify them for $150,000 more for the next home. And so that's one of the ways we're able to qualify them for a higher purchase price is we
Hmm.
are allowed to pay off their current debt to qualify. We can actually pay off all their debt. So imagine you have somebody who is equity rich but debt heavy, multiple cars, credit cards, everything. In
Hmm.
addition to the down payment, we're paying off debt to qualify. Um, so what's the benefit to the borrowers? I mean, they essentially could buy non-contingent. That's the biggest benefit. And if you look at the
Hmm.
fact that you could buy non-contingent, now all of a sudden your offer has a higher chance of getting accepted, especially in a scenario where you have a seller that doesn't want to accept contingent, which most sellers do not, or if it's a hot home and now you're competing against somebody else that's writing an offer. I mean, you really don't stand a chance with
Hmm.
the contingency. You could get up to $750,000 to cover from your current equity to essentially cover the down payment, the closing costs, pay off the secured and unsecured debt, like we talked about. In addition to that, we could hold back from their equity $35,000. We call it home prep, for them to be able to take those funds and prep their old home that they have uh,
Hmm.
to sell. So again, multiple ways to use their equity in their current home, not just a down payment, not just paying off debt, but 35,000 to essentially remodel, prep, get the home ready, the previous home that they have that they're going to sell within 6 months, get that home ready for sale. Uh, and that includes, their moving expenses of 5K as well. In addition to that, there's no payment on the current bridge loan that they're getting, which is that piece covered from the sale of their home, which we'll talk about in a second. But we're actually covering their current monthly payment as well. Up to 6 months of payments is what's getting covered for them with the bridge loan. So one of the biggest ways where we're able to, you could say, separate ourselves from the traditional bridge loan, and
Hmm.
why traditional bridge loans essentially don't work is because most people don't qualify off of 3 mortgage payments. So if you think about it,
Hmm.
with the traditional bridge loan, you have the new home, the bridge loan, and the old home. Whereas
Hmm.
the with our bridge loan, you only have the new home payment afterwards, and that is it. There
That's
is
phenomenal.
It's only one mortgage payment that we qualify for. So then the client doesn't have to worry about their current mortgage payment. They don't have to worry about paying for the bridge loan, and essentially move in one payment while they prep and get their home ready to sell, which is essentially the biggest reason why our bridge loan is super usable. Because let's face it, right now, I mean, with the rates where they're at right now, very few people qualify off of 3 mortgage payments. It's just a fact that very few qualify
They
for it.
just can't.
It
And
just
this is one thing what we were talking about with you last time, just allowing the flexibility of not so much capital out. And that's what people are, have a hard time with. People have money in their home, and this is just allowing that equity to be used across the whole transition without literally butchering the deal or exhausting the client's resources. So yeah, this is a phenomenal setup.
Yep. So in addition to that, so a lot of people look at it and say, okay, well, if I'm doing a contingent deal with my client, let's just say that the seller will accept a contingent offer. In reality, for the consumer, sometimes that's not the best option because then they're under kind of the gun to sell, right? Like they got
Sure.
their home under
Hmm.
contract, a new one. Now they got to get their home sold. If the market's a little soft like it is right now, what do they have to do? Keep dropping the price. They don't have time to prep it, get everyone out of it,
Yes.
have it be staged if that's what they want to do. Do some repairs, whatever. So one thing that we've noticed is that when somebody buys their next home and they have 6 months to sell, and I'm sure as an agent, you could attest to this, is that they're most likely going to sell their home for more than being contingent and having to sell it within a short time frame. So that's something that definitely is a benefit to the client as well, to the buyer as well.
Hmm.
Now, the question is, what does it cost? What does it cost? So
Right.
with zero upfront cost, the closing costs themselves for this, you could say, second mortgage on their current property are about 1850. There is a one-time 2.25% contract fee on the home that they're selling. So, for example,
Hmm.
let's just say that they're selling their home for current home for about 500,000.
Hmm.
2.25% of that amount that they're planning on selling their home for is what they're paying in cost. So if you look at our example, I mean, our average client, they're paying anywhere between 10 to 12 to 15,000 for the essentially the service of the bridge loan. Which, if you think about it from one side, there's a cost to this. However, most people that are writing an offer non-contingent, they could get the offer accepted and not be as aggressive on the price. For most people that are
Hmm.
not in a hurry to sell their home, most of them could sell their home for more if they had 6 months to sell it versus being contingent. So the cost that they pay for the bridge loan versus the benefits of the bridge loan on making an offer, being more competitive, being able to sell your home, for most people, they end up saving more with the bridge loan option versus trying to time it all perfectly, buy and sell at the same time, get the seller to accept the home, uh, accept their offer, and so on. So, but
And it's not too big of a feat, to be honest. I mean, if you're considering all the benefits out of this transaction. So I feel like it would cost actually a lot more money if people were trying to, buy, sell, move, carry all the financial burdens,
yeah,
even for, 3 to 6 months.
yeah, and in addition to that, keep in mind there is no payment on the bridge loan funds. That is the fee that covers it, meaning that they're not paying a monthly payment for the bridge loan. So, and again, zero payments for 6 months,
Mm-hmm.
zero interest for 6 months on the bridge. It's just a one-time contract fee. So the question is, who qualifies? So they have to be selling in one of the states, which, as you could tell, Washington, Oregon, California is covered. They could buy anywhere. So in your state, this absolutely works. It
Mm-hmm.
works in, you could say, right now about 40% of the states. We are working on getting it everywhere. I know that we're working on Idaho right now, Montana right now. So we're adding states, you could say, every few months. Eventually, it'll probably be everywhere. But as of right now, where you're selling matters, not where you're buying. You could buy anywhere in the US. So if you have clients that maybe contact you, David, and they want to sell in Oregon and they're relocating to Texas, right? I mean, Texas is
Mm-hmm. Mm-hmm.
currently not a state that's allowable, but if they're relocating to Texas and they want to sell in Oregon, you could be the person that connects us they buy their next home with one of your partner agents
Mm-hmm.
in Texas, and you could be the person that sells their current home in Oregon. Um, what
That
else?
is awesome.
What else do they need to qualify? They have to have a credit score of 620. They could use up to they could do a down payment of up to 50% on the next home, which is an enhancement. It was 30%. We just ended up raising it to 50% of the purchase price. So all their equity that they have, they could do up to a 50% down payment on the next home. And then this is a big one. It has to be a primary residence to primary residence, meaning their home that's departing is primary and they're buying a primary. They can't be
Mm-hmm.
it
Mm-hmm.
can't be a rental. They can't be buying a rental. It's primary to primary only. And then the maximum list price in most markets is up to $1.5 million. So in some markets, like high cost areas like Seattle, I believe in Portland, it's up to 2
Mm-hmm.
million from their departing residents, but in most markets it's 1.5 million, which is an enhancement because it was 1 million. Now it's up to 1.5 million. So as we do more of these, as this product continues to become more popular in the marketplace, they are making it easier, more flexible, more usable, and so on. And so anyway, that's kind of the main qualifying. So I just want to kind of point something out. This only works if they are obtaining a new mortgage. If they're trying to pull their equity and buy the next one for cash, it does not work. They have to be buying a new home. We have to be doing their next mortgage. We have to be able to pull their equity. They have to have equity in their property. And then again, it allows them to buy first and gives them 6 months to sell. So what else makes this different is that it comes with a purchase guarantee. This is something that I want to talk about because the way that we're able to not have to hit them against their second mortgage payment, which most bridge loans, again, you have to qualify for new mortgage, old mortgage, bridge loan. Most people will never qualify for free loans.
Mm-hmm.
The way we're
Mm-hmm.
able to um, ensure that we do not have to count that current mortgage against them is because there is a purchase guarantee. If they do not sell that home in 6 months, the program buys the home from them. It is a price that they agree upon up front. Typically, it's about 80% of what the market value is. It's a guaranteed sale for them. So if for whatever reason they don't sell it within 6 months, this product, their home will be sold automatically to the Knockbridge loan. Now, I want to make something clear. No one wants their house, and the last thing they ever want to do is have it fail. So what happens if they don't sell? What are their options? One is they could always just pay off the bridge loan. If they pay off the bridge loan, then it's fine. Everything is good. Then their home doesn't have to be sold. That's number one. Two is they could obviously reach out and ask if they could get an extension, which might be granted, might not be granted. But the product is going to do everything they can to help them sell the home within 6 months. So anyway, that's pretty much how the product works. It is for anybody, any agent that has a client, any buyer that's or seller that's looking to buy first, sell later, move first, sell later with ease, be non-contingent, qualify for more, and so on. That is essentially the kind of the power of this program. And I'll kind of end it
Mm-hmm.
with one story that I have from about a year ago. I was working with a client, and they got pre-approved. They wanted to buy their dream home. It happened to be on this lake that was next to their home, and this is kind of when we first kind of started doing these on a high level. And we had them pre-approved. They were looking for a very specific property. A few months later, their perfect dream property came out. It came out a little over $1 million. They made an offer contingent because that's their ultimate
Option.
path that they wanted to take. They felt like
Mhm.
paying 2.25% was a little much. It was right around 15,000 for them at the time, and we're always like very neutral about it. Hey, that's fine. It's an option. If you want to use it, it's here. If you don't, we could always get the deal done as long as the seller accepts your offer contingent. We can get it done. Long story short, they submit the offer. The seller comes back. They're like, "Hey, we've only been on the market for like a week," and the seller came back and said, "No, we're not going to accept contingent. If you have any way, because they submitted a full price offer, to be non-contingent, we'll accept your offer." They relooked at the numbers with everything, and again, they got stuck on the 2.25%. The sellers, about a week later, end up getting another offer out of nowhere, and that our offer that they got was $20,000 more than our buyer's offer. So what did our buyers do? They raise up the offer to 20,000. Now all of a sudden they're fine with the bridge loan, right? Um, the other now we have a competitive environment. We're talking about kind of a small lake in our area. Homes don't come up on the market that often. They wanted to be in a certain part of the lake. Check all their boxes. Well, then all of a sudden, then this home was listed for right about 1.1. We're at 1.120 right now. The other buyer goes up to 1.2. What does our buyer do? Now they go up to 1.2. Now we're 100K over because the buyers were trying to save on about 15K in bridge loan costs, right? Then so they're both at 1.2, 1.2. The seller has to decide. The seller goes, you know what? I'm going to choose the next person. They're not selling a home. I don't have to worry about this. They came in hotter from the beginning. You guys, had an opportunity. Now you guys are coming up. They ended up not getting the home. In addition to that, since then, there has not been any homes that have come on the market in that lake, on that lake. So for 15K, they ended up losing on a home that they ended up willing to pay 100K more for. Now, that's just one story. Imagine all the people out there that are in the same position right now that just don't know that this product exists. So I had one listing agent that we worked with on a transaction who knew about our product. They had a buyer that approached their seller and they wanted to be contingent. And their seller, of course, didn't want to accept the contingent offer, but everything else was right. The buyer and the seller ended up meeting. They ended up liking each other. Long story short, they connected us. We were able to
Mhm.
approve the client with our bridge loan, which their lender didn't have. They ended up going mutual on a home at 975. Our buyer, who became our buyer, then now has 6 months to sell. Who said, "Hey, this is really convenient because as soon as I buy this home, I actually want to do some repairs to it. I want to remodel it a little bit. I don't
Mhm.
want to try to move at the same time." So not
Mhm.
only was it convenient that they were able to get their offer accepted, but the fact that they didn't have to, as for those that have been involved in a contingent transaction with their buyers, they're buying and moving the same day. Two transactions, things could go wrong. Everything's in storage typically. It is stressful. These people moved into the home. They did some nice repairs to the new home. They moved out of the home. They ended up prepping their current home for sale, and they ended up selling it for quite a bit more than what they actually thought it was worth, which is a surprise. But the point is that it gave them the flexibility to do so.
Mhm.
I think that
Mhm.
a lot of people don't realize how many buyers are stuck because they're like, well, if I sell first, let's just say I want to,
Yes.
somebody tell me to sell first.
Mhm.
Well,
Mhm.
what happens if I don't find my next home that I want, right? Like a lot of people are stuck because of that reason. So imagine if, hey, you don't have to sell until you buy, then you have 6 months. So it solves so many problems for the people today, which we know 2/3 of them have a current home. It solves so many problems. Let me just take this one step further. There have been real estate companies that have been built on products like this to where all they do is they advertise to this need. Buy first, then sell with our product. Any agent today who has any clients in the past that they've worked with that reach
Mhm.
out to them, um, offers the product to them. Like I know a lot of agents that actually bring this to listing appointments, that that they're able to be more, have an edge over other people on listing appointments with this product, and they're able to charge a full 3% or whatever their fee is, because they're able to bring a solution when other agents are saying, oh, sorry, you just have to buy and sell at the same time. We're just gonna have to do this right. We're gonna have to be more aggressive,
Mm-hmm.
or whatever.
Mm-hmm.
Whereas you could essentially give your clients options and solutions that other lender or other agents are either too lazy to talk about, don't know that exist, or just haven't educated themselves on what's out there. And I think in our market, in our world right now, too many agents, too many lenders are the same as everyone else. So being able to differentiate yourself is what's going to give you that competitive advantage and allow you to show what you're really, really worth to your buyers and your sellers. So anyway, that's the product.
Yeah, and
Yeah.
And that's exactly, Oleg. I've been talking to all our broker audience in our community that, our conversations have to change with our clients. The conversations that we had 6 to 12 months ago have to be so different. And especially, working a lot of new home division, our conversations with builders, with sellers has to change. With investors, it's changed with everyone. So, yeah, our scripts have to change. We have to pivot with the market, and we have to fill our toolbox with new tools, and this is why we're having these conversations, because we want to bring this back, to the broker community, so they are aware, hey, bridge loans are, a great tool to have, because most of your clients, well, if you say 2/3 or even 50% of your buyers or 50% of your sellers who have a home now have an option to buy and don't have to be on the fence anymore, because they don't want to carry two mortgages, or they don't want to be left out. And again, what's unique about, and I talked to this, and you brought up the case study, there's a huge aspect of our business that is commodity. Every home looks the same. But then there's a huge aspect of real estate where it's not the same. And those buyers, like you mentioned, have been waiting for this house forever, and then when they needed to act, they were not able to be competitive in the market. So that never changes in real estate, whether it's location, or it's a custom home, or it's a custom product, or a custom community, where, whether the market's soft or hot, this is where I say, there's certain pockets of the market that, are not subject to the market. And I feel like what you just said, that sector is still really huge, and they're not subject to the rate, and they're not subject to the market, because there's only so much good product out there, meaning of customization, or on the golf course, or on the lake, or so forth. And when that stuff hits the market, buyers better be having every single tool in their, toolbox to act upon that. And that's what we have to do. Those are the conversations. So when brokers hold open houses, this is like they should be having 3 4 lender concepts tools, associated with, yeah, hey, a buyer comes in, they're in this circumstance, we got to pivot them this direction, we got to help them understand that these lending options. So I really appreciate you, taking time, just educating us on the bridge loans. And I think this is how we're going to market it. And then definitely tell all our brokers in the community that, our conversations need to change. And if everybody has questions, I know your name and your numbers here on the screen, and then we'll put it in the comments section. But I feel like this is where, you're going to stand out in today's market. If you have more tools and more options to offer to your customers, and not, and just be more proactive. It's the opportunities that we have to offer, but not, sell them on fear, or the news, or whatever. If people can afford, they got equity in their house, they just, move on, buy the home, use the bridge loan finance, and, keep going in that direction. So, Oleg, thank you so much for your time. I know we'll get a bunch of flyers from you on the bridge loan program stuff. We'll try to update it. And then we'll definitely send this video out to our community, and we'll definitely be in touch.
Awesome. Thanks for having me again, David.
Appreciate it.